Right now, the US telecom industry is in an all-out sprint, a race to completely rewire America with fiber optics. And if you're an investor, this story is fascinating because it's a total 180-degree flip in strategy. You have to understand, for the better part of 2 decades, if a telecom CEO even whispered the words big fiber investment on an earnings call, their stock would just get hammered. Wall Street wanted one thing: capital discipline. That meant dividends, it meant stock buybacks, and it definitely meant avoiding huge long-term spending projects at all costs. And we're not talking about just any old spending here. This is a multi-trillion-dollar rewiring of America, a near total rebuild of that last mile of the internet. I mean, a generational, continent-spanning project that was seen as, well, completely, utterly toxic from a financial perspective.
So that's the big question, right? What changed? Why on earth would an entire industry, almost in perfect sync, suddenly pivot and start pouring billions into the very thing Wall Street screamed at them for years was a terrible, terrible idea?
Well, the answer isn't just one thing. It's really a perfect storm of forces all coming together at once. So in this explainer, we're going to break it all down. We'll look at the old logic, why they hated fiber. Then we'll see what forces came in and just shattered that logic. And finally, we'll get into the new playbook that's driving this modern-day fiber gold rush. All right, let's start with part 1, the thesis. Think of it as the copper fortress. For decades, the big telecom companies defended their old copper network like it was a castle. And honestly, from a purely financial point of view, it made perfect sense. It really was a tale of 2 completely different logics. You had the old investor logic, which was all about capital discipline, dividends, buybacks, short-term returns. And then you had the new fiber reality: sky-high capex, incredibly long payback periods, and a big question mark on the return on investment. They were polar opposites. And when you look at the numbers, the dilemma becomes crystal clear. Building fiber to the home? Yeah, it promised amazing speeds. But the payback? We're talking 11+ years. On the other hand, you could just upgrade the existing copper and cable lines. It was way cheaper, way faster to do, and the speeds were good enough for the time. So if you're just looking at a spreadsheet, the choice was a no-brainer: patch up the old network. This led to something called the stranded asset dilemma. And get this, a 2011 IRS rule actually made it more tax efficient to call something a repair on the old copper network than to build a brand new fiber one. Now, for an investor, this is absolutely crucial to understand. The tax code itself was creating a value trap. It was actively encouraging these companies to pour good money after bad, patching up a dying asset instead of building the future. Okay, on to part 2, the antithesis, or as I like to call it, the walls crumble. Because that fortress of copper, which seemed so strong, well, it started to crack under the pressure of some major converging forces. First off, just an absolute explosion in demand. Think about this. In 2010, the average US household used about 9 gigs of data a month. Fast forward to 2023, that number jumped 70 times to 641 gigs. 70x. You've got 4K streaming, all our smart devices, cloud gaming. All of a sudden, that good enough network was, well, it wasn't even close to being good enough anymore. But it wasn't just one thing. It was truly a perfect storm of events. You had Google Fiber launching back in 2010, which completely reset what people thought was fast. Then, a decade later, the pandemic hits, and suddenly everyone needed those super fast, symmetrical upload speeds for working from home, something only fiber can really deliver. And then, the final piece of the puzzle, the government stepped in a big way. And that government support was a total game changer. I'm talking about the BEAD program, which set aside a whopping $42.5 billion to help pay for building out these networks. This money basically took a huge chunk of the risk off the table for these companies. Projects that were once considered money losers suddenly looked like pretty solid business cases, almost overnight. Which brings us to part 3, the synthesis. This is where all those forces come together to create a brand new, powerful business case for fiber. And this is what really lit the fuse on the fiber land grab we're seeing right now. So the new math here is just really compelling. It turns out fiber customers are just way more valuable. They pay more for better speeds, which means a higher average revenue per user, or ARPU. Plus, the service is so much more reliable, so they stick around longer. That means lower churn. So you get higher revenue and they're more loyal. That completely flips the script on the lifetime value of a customer. And here's another huge piece of the new playbook: 5G. See, for 5G to really work, you need a ton of these little small cell sites everywhere, and every single one of those needs a fiber connection to the main network. So carriers realized, hey, if we're already running fiber to people's homes, we can use that same fiber for our 5G network. By doing that, they can slash costs by an incredible 65 to 96%. It's brilliant. One big investment powers two of the company's biggest growth areas.
But it doesn't stop there. The network becomes a platform for all sorts of new revenue streams. That same fiber line can be used for high-paying business customers, it can be leased out to other wireless companies for their 5G networks, and it can be the backbone for future smart city tech. All this new, diversified income just makes that initial investment look better and better.
Okay, so let's get to the bottom line. Part 4, the investor's playbook. With all this going on, how should you, as an investor, think about this new era?
Because at the end of the day, it all boils down to one question, doesn't it? So where are the returns for investors? With all these billions being poured into the ground, what does the actual investment case look like today?
And really, it's a classic bull versus bear debate. The bull case is pretty strong, right? Fiber is a long-life, future-proofed asset. The economics for each customer are just better. It's the key to 5G, and it's getting government subsidies. But you can't ignore the bear case. The spending is astronomical, there's always a risk they won't execute well, and competition is fierce, not just from cable, but also from new 5G home internet services.
You know, this quote, I think, just nails the fundamental shift that's happened. For decades, the phone companies were playing defense against the cable companies. They were just losing customers left and right. But fiber, for the first time, gives them a product that is flat out better. It finally lets them go on the offensive and start winning customers back.
So the race is on. The great American rewiring is happening. It's really not a question of if fiber will be built anymore, but who holds the winning playbook? For investors, the question is which companies are actually getting it done? Who has the best strategy, the best execution, and the discipline to win this land grab? The new playbook is out there. Now we get to see who can run the plays.